So let us now understand how and why to participate in the upcoming growth story. And we will have with us Prateek Pant, the CBO, White Oak Capital Management, joining us. Well, Prateek, 25 years of experience for you. Please take the stage and please keep clapping.
Thanks everyone for joining in out here. It's actually quite amazing to be here after more than 2.5 years and attending a physical event in person. So I may be talking about bubbles and creative destruction, but we've realized that the human, we all come back and gravitate towards things which are comfortable to us. And being in this audience is something which one would say comes naturally to us. I'm not here to talk about markets, right? I know we're doing this in the backdrop where you've had a big sell-off today. So what has happened over the last few weeks? But Ravi was talking about how this is the decade for India in his last presentation, and I'm here to talk about how this can happen. Right, one of the dominant themes, which one cannot stay away from, even if there are a lot of people who are still sitting on the fence. So it's about I'll just start with this. I'm not going to give you the answer today. Right now, we'll talk about it. But what's really common with some of these great personalities? You've got one of the top scientists of their era. You've got one of the best authors. I know we've got some authors sitting out here also, but we've got that. We've got an Oscar-winning actor. What's really common out here? These are some common names which we've known over generations and decades and centuries. We'll revisit this at the end, right? But just keep that as a thought when I'm talking about this. So we're here to talk about bubbles. Normally, the first thing which comes to our mind when we say bubbles is destruction of wealth. It's about how people have been duped. It is about prison sentences and generations' wealth which gets wiped out. But what we have seen, when you look at some of the bubbles which have gone back over 5 centuries, that each one of these bubbles actually led to some amazing innovations in those periods of time, right? So while it may be not apparent when we are going through that period, but it is something which we've seen over the next few decades play out, right? So early 18th century, 19th century, when you had the South Sea bubble and all these are very well researched, over a period of time, and people can read through this, right? Like the railway mania actually created the whole railroad network in the US and and that was the blueprint for railroads across India and some of the other markets also. Of late, the one which all of us, of course, went through was the dot-com bubble. And think about it, right? You've had some of the top companies like Amazon and subsequently Alphabet and Google and very recently Netflix, all finding its roots in that period which was there. There's a cycle which happens to this bubble, right? And this cycle is about, let's provide capital, right? You'll find a lot of private capital coming in, some amount of public capital coming in. It's fine to fail. It doesn't mean that every company who's part of that cycle is actually going to be a runaway winner. You will see some niches coming out. Today, when you're looking at this whole EV ecosystem which is there, the early movers out there are not necessarily your traditional companies. It's been some of the new companies which have found its root only in the last 5 years, right? They are the ones who are actually going and exploring and discovering some of these niche, right? There are attempts at commercialization. You will at some point see a lot of people coming into this and a form of fading returns, because there's, that whole marginal utility comes into play. And then at some juncture, then finally, is where you see this whole creative destruction happening, right? Because you're seeing erosion of value, you're seeing exuberance in the market, and then the mathematics of actually the business does not add up, because your whole cost of acquisition of customer versus the lifetime value of a customer, those equations don't make sense. I'll talk about these equations a little bit later. But when we look at, a prime example, that's the device I love, right? It's the iPhone 13, which I have in my pocket. It's my supercomputer of today. But what did it replace? It probably replaced everything out there, right? And does anybody miss any of this now? I don't, I mean, yes, you can have a nostalgia value, you could have that in the museums, but from a utility perspective, right, the smartphone disruption has spawned a completely different, utility for consumers all over the world. The other very big societal bubble which was there was the NASA space program. If you go back in time, and if we had to do an inflation adjusted number for that, the US spent almost $200 billion in that era building up this entire space program. It was more about, when it started, it was this whole geopolitical issue which led to this Russia versus US war on space, right? Who goes there first? But it actually created some amazing amount of innovation in the 60s and 70s, which was not just for the space program, but which actually found its way in things like integrated circuits, telecommunication. AT&T was born after that, in a way, right? You had almost 1,500 patent spin-offs, which were created from the NASA program, which is there, right? So today, when you see the space program in the US, it's all dominated by the private sector, right? So in many cases, you will see that something which is associated as a massive spending program, massive bubbles, creates its value in many, many different other chains down the line. So what is relevance for India? We've spoken about this in a global scenario. How does this really impact us? And it comes back to the point which I was making, that if we believe that the next decade belongs to India, what are some of the themes which are going to be quite important, right? An area which had always hampered us was the availability of capital, right? And this goes back to the 90s, where you had to borrow money significantly, and then even in the early 2000s, the only source of money was really your markets, the capital markets, the listed equity markets. But what has come to in droves right now has been the emergence of private capital. Entrepreneurship is never a problem in India, right? We don't want to pat ourselves, but we're probably among the smartest race of people on the planet at this point of time. And that's why you find Indians dominating, the moment there is an opportunity in different type of geographies, in different areas. I guess most of the wealth in India traditionally was locked in land and gold, right? Now you're seeing emergence of a lot more of penetration of financial savings coming in. And the emergence of private capital is something which we've seen come by droves over the last 1 decade. Right? Today, when you see private capital actually outstrip public capital, right? And this provides an amazing amount of, so what was earlier really, one of the, disadvantages or lack of access for entrepreneurs is no longer the point, right? People go with great ideas and you will have, people lined up, VCs lined up, angel investors lined up to actually sign checks for them. What you also have, and we've talked about this in many, many presentations over the last 25 years, right? Where I've spoken to investors, is we've always had availability of talent, right? The Infosys and the TCS and the whole technology ecosystem has created global talent which have very good understanding, in SaaS, in edutech, and many other areas. I think the other very big area which has emerged in the last, especially 3 to 5 years, is this whole emergence of unicorn investors. So people who've made it big, who understand the space, who know that immediate profits is not relevant, but creating that profit pool over a period of time, that thought process is coming in from unicorn investors. The prime example is Shark Tank right now in India, right? I was amazed. My mother's hooked onto it, and she's 75. And she used to tell me this, you always spoke about this, but now I'm understanding what's really happening out there. So it's no longer a business channel, program with certain TRP ratings which are only confined out there, but this is pretty much mainstream, right? Which is seen and now has found interest among a whole lot of new category of investors, including investors who've created wealth through some of these ideas. If you look at the whole industry ecosystem, right? I've tried to put all what we're doing in one particular chart out here. The traditional Kirana stores which were there, the retail stores which are there, is really being disrupted by this whole e-commerce the whole e-commerce space. One of the other big areas where you're seeing things happen is the area of edtech, right? You've had some large edutech companies like the Byju's and Vedantas who've become now household names across families. The area where we will start seeing, and we've already started seeing, is the fintech ecosystem. While it started in a small way with the payment space, there was a little bit on the NBFC side which happened, but now you're seeing across value chains, companies, traditional banks, and lending institutions being disrupted through fintechs. So this is, leveraging technology, internet to actually reach masses is there to stay at this point of time. And it's important for people to realize that, if you're not part of this, you are going to also become one of the fossils out there, right? So you have to find a way in which you actually start working with this ecosystem and see how you can benefit out of the ecosystem. This is pretty much, 5 pages of media right now in terms of number of unicorns which are getting created. The fact is that we've just started the year and there are already 10 unicorns even in Feb. So while the public markets may be getting disrupted quite significantly, you're also seeing some slowdown in the private markets, but it's still fairly vibrant and deals getting announced on a day-on-day basis. India really is now the third largest country for unicorns, right? We overtook UK last year and we already double of numbers of where UK is at this point of time. And this trend is here to stay. We keep getting asked this question, right? At White Oak, we've invested quite significantly in the new age companies. And a lot of times these questions do come to us. Are we in a bubble, right? The answer is, I don't know. The bubbles never have a way of announcing that this is a bubble which is started or this is a bubble which is going to end, right? It is only in hindsight that that people know about it. But so how do you get some indicators around what is happening, and how do you invest into some of these type of businesses? The fact is that there are a lot more heterogeneous businesses which are there, right? There are going to be large winners and losers. Not every investment which is being done today is going to be the stories which you've seen in the previous slide, right? Because everybody likes talking about the successful businesses. People don't talk about businesses which have gone down to zero. So one of the parameters, and this has been a debate in the media, right, a lot, that these companies don't make money. Just because a company is profitable does not necessarily mean that it will be the winner of tomorrow, because there are companies which are at different levels of their business cycles. These are very well-known names which we've put out there, right? From your Teslas to Amazons to Netflix, Facebook. None of these companies were profitable for months, years, and in some case, decade. But they are really what the household names, not just in the US, but across the world. I guess the last point which we say is one of the most important thing, and that's where you really need managers who understand the space, who understand how some of these tectonic shifts are happening, to be able to do assessment of what is the potential of these businesses. You're really, what you are looking at, what is the long-term cash flow generation of a particular business or an idea to ascribe a certain value to a particular business. So again, if I was to look at our model which we use at White Oak, we've got a simple way in which we assess businesses, right? We're looking at great businesses at attractive value. Now, this is what we use, whether it's a traditional business or it's a new age business. How do I define a great business, right? A great business is something which has superior return on incremental capital, not existing capital, right? It has scalable long-term opportunities. So would I invest in a newspaper business today? Very unlikely, because we know that those type of businesses are getting disrupted, right? The third thing, which is also very important, is strong execution and governance. Today's newspaper talks about one of the famous startup companies where there has been serious governance issues within the promoter group, right? So just because it's a startup or it's a new age company does not mean that these parameters are not important. So what you use to evaluate traditional business is exactly the same thing you would use. But the lens, tools, and techniques for some of them is very different. For example, when I'm assessing the efficiency of business model, right, I'm looking at what is my total addressable market, right? I'm looking at ratios like what is the lifetime value of a business versus the cost of acquisition of a particular client. And finally, you're looking at what type of competitive advantages does this business have? Economies of scales, network effects, intangible assets. Many of these things are really what will contribute to understanding the long-term cash value of this business. This is a very simple calculation, right? When I look at acquiring a customer and I'm spending 100 rupees on a particular customer, I mean, think about a Zomato type of a model, right? If this is your cost if 100 rupees is the cost of acquiring a customer, and if that customer can pay me 80 rupees for the next 4 years, right? My ratio of LTV to CAC is 3.2 versus a client which is only going to give me 40 rupees where my LTV to CAC would be 1.6. Now, this is simplistic way of looking at it, but we would typically do 10-year business models to actually derive at something like this. Finally, to end with, right, Peter Thiel is one of my gurus when we talk about the whole ecosystem of investing in new age companies. He wrote this book 0 to 1, right? And the fact is, when you make changes, right, you can't make incremental changes and expect to create a big business difference. These changes have to be quite tectonic. It has to be that 0 to 1. There is only Bill Gates or Larry Page or some of these guys have done that once. The next guy who tries to do this is not moving from 0 to 1. He's only making any incremental changes out there. Finally, to that question, what is common between all of them? Any answer? Any guesses? Yeah, all of them lost money. They lost significant amount of their earnings investing in bubbles, right? So the best of the best, the smartest of the smartest do lose money in these type of opportunities. So it's not as easy to just understand how things are coming your way. Thank you.